Is this the start of the real altcoin season? Some of the biggest names in crypto think so. A new inflation report has the market buzzing, with traders betting on a 94% chance of a Fed rate cut. While Bitcoin stalls, Ethereum is absolutely flying, smashing past $4,600 and getting dangerously close to its all-time high. But the real story is the big money flooding in. We're talking about Peter Thiel and major firms shifting their focus from Bitcoin to accumulate massive amounts of ETH. Some analysts are now calling for a $10,000 Ethereum this cycle. At the same time, Becker warns that the AI crypto sector is about to see stupid gains driven by pure hype. With all this happening, are we about to see the market top in 2025, or is this time really different? In the latest video from Crypto Rover, the host explains that we're seeing a classic market cycle play out right now. Bitcoin's price action has become boring, while Ethereum is surging, marking what he calls phase 2 of the bull market. He believes we are in the last 2 months of this entire bull run. This current pump in Ethereum is expected to last for another 2 to 3 weeks before we see money rotate into other altcoins, kicking off the real altcoin season. The videos focus on market cycles, with Ethereum leading before an altcoin rally is a common narrative in the crypto space. The point about a massive $20 billion buy from Tom Lee of BitMine really stood out. It's a huge number that would definitely move the market. However, there appears to be a mix-up in the details. Tom Lee is a well-known analyst from Fundstrat, not the CEO of BitMain. The story of a specific $20 billion purchase from him seems to be more of a rumor than a confirmed event. While the general idea of big money flowing into Ethereum is very real, especially with the recent ETF news, this particular claim seems to be a bit of an exaggeration. It does show how powerful narratives about institutional investment are in driving market sentiment right now. In the latest video from Lark Davis, the big question is when to sell your crypto. Are we sticking to the classic 4-year cycle, or is this time truly different? One camp is betting on the tried-and-true method, which points to a market top around late 2025, about 500 to 540 days after the Bitcoin halving. Supporting this, John Glover, using Elliott wave theory, told CoinDesk he sees Bitcoin hitting $135,000 to $140,000 by the end of 2025 before a bear market takes over. Other analysts like VA Fundstrat and Standard Chartered are even more bullish, forecasting a 2025 peak between $180,000 and $250,000. The debate between the 4-year cycle and a new, extended cycle model is compelling. I think the influence of institutional money from ETFs is being correctly identified as the main variable. However, this could be a double-edged sword. While it brings massive capital, it also ties Bitcoin's fate more directly to traditional finance and macroeconomic news like inflation reports and Fed interest rate decisions. The old cycle was driven by a relatively small, self-contained community. This new cycle is now a passenger on the Wall Street bus. So, while the bull run might extend longer, I believe it will also be subject to more intense volatility based on global economic sentiment, not just crypto-specific events. The idea of a smooth ride into 2026 might be overly optimistic. We're more likely to see sharp reactions to traditional market fears, making a steady profit-taking strategy seem all the more sensible. In the latest video from the Coin Bureau channel, Nick explains how the SEC has completely changed its tune on cryptocurrency. Under its former chairman, Gary Gensler, the agency was seen as an enemy of the industry, labeling 69 different cryptos as securities. Now, with the new chairman Paul Atkins appointed by the Trump administration, the SEC is actively encouraging innovation through a new plan called Project Crypto. This video paints a very optimistic picture of what a change in SEC leadership could mean for crypto. The idea of Project Crypto is exciting, especially for sectors like RWAs that seem poised for growth but are held back by regulatory uncertainty. However, it's important to frame this correctly. The video is presenting a speculative what-if scenario. As of today, Gary Gensler is still the SEC chair, and the agency hasn't actually made this dramatic U-turn. The content is more of a look at what could happen under a different administration, rather than a report on current events. While the concepts are exactly what the industry wants, clarity and support for innovation, the market is still dealing with the current, more cautious reality. In the latest video from the Cryptos Rush channel, The host makes it clear that he believes altcoin season has officially started. Today was proof, as pretty much every sector, from L1s and DeFi to AI and meme coins, was up. The big driver for this rally was a favorable inflation report, which showed prices are actually heading down. This has everyone buzzing about a potential interest rate cut from the Fed in September. The talk has even escalated, with major players like BlackRock's Rick Ryder now calling for a 50 basis point cut, not just a 25. The odds of a cut are now sitting at a whopping 94%, according to the CME prediction tool. While Bitcoin is still getting ready for its next big move, Ethereum has been the star of the show. ETH shot up 10% to hit $4,600, getting very close to its old all-time high of $4,800. A lot of this excitement is being fueled by big money. Famed investor Peter Thiel, for example, has been investing heavily in companies that are accumulating massive amounts of ETH, like Tom Lee's Bitmine company and another one called Itzilla. This has led to some wild predictions, with some traders seeing ETH at $6,000 soon and possibly over $10,000 by the end of this cycle. Other coins like Solana are also doing great, nearing the $200 mark again. The host suggests that for now, it's a good idea to watch the major American-based Layer 1 projects like Avalanche, Sway, and Cardano, as they tend to benefit most when the market gets hot like this. The video's take on institutional interest driving Ethereum is spot on. It's not just talk. The recent approval of spot Ether ETFs is a concrete step that has put ETH on the radar of a whole new class of investors. This institutional involvement seems to be changing the market structure, making it react very strongly to traditional economic news like inflation reports and Fed policy. The idea that American-based projects might see extra attention also makes sense, especially as regulatory discussions in the U.S. continue to evolve. While the current mood is very positive, the market's dependency on these economic reports means we could see just as much volatility in the other direction if the data doesn't meet expectations. In the latest video from The Modern Investor, the host explains a dramatic shift happening in the crypto world where big money is moving aggressively into Ethereum. It's not just a small trend. We're talking about companies, even ones with Bitcoin or Bitcoin in their names, completely changing their strategy to focus on accumulating ETH. For instance, a company called Bitcoin's filed to raise a staggering $2 billion with the direct intention of buying up Ethereum. It's interesting to see the corporate playbook, famously used by companies like MicroStrategy for Bitcoin, now being applied to Ethereum. This move feels less like simple speculation and more like a calculated business decision. The shift from companies named Bitmine or Bitcoin S away from Bitcoin and into Ethereum is a powerful statement. It suggests that major players see Ethereum not just as digital gold, but as a productive asset. With staking, Ethereum provides a yield, which is something Bitcoin doesn't offer. This essentially turns a company's treasury into a revenue-generating machine. The idea that banks will build on and stake ETH only adds another layer of long-term demand. It's looking like the race to acquire productive digital assets is well and truly on. In the latest video from Becker's channel, he gets straight to the point, saying there's no time for jokes because retail investors are flooding back into altcoins. He argues that the massive amount of money currently pumping Bitcoin and Ethereum is about to cascade down into smaller coins, and the sector that will see the most stupid 10x, 20x, and 30x gains is AI crypto. He believes the story connecting AI and crypto is the most powerful one in the market right now, suggesting blockchain is necessary to verify reality and decentralize AI power in the future. This narrative, he claims, will lead to Wall Street and big institutions causing ridiculous overvaluations, even for projects that are complete vaporware. Becker's take on the AI crypto sector being driven by pure hype and a powerful narrative feels pretty accurate. The connection between AI and blockchain is a compelling story for investors, especially with the AI boom happening in the traditional tech world. We've already seen tokens like Render, RNDR, and Fetch.ai, FET, get huge boosts from this sentiment. The idea that blockchain can provide decentralized computing power or verify AI-generated data is a solid long-term vision. However, Becker is right to frame this as a short-term, speculative play. The valuations of many of these tokens seem to be based more on that story than on any real revenue or adoption right now. It has the energy of a gold rush, where the biggest gains might come from betting on the hype itself, not necessarily the underlying tech. The risk, as he points out, is that many of these projects are essentially startups, and when the hype fades, a lot of them could easily go to zero.